Hello students, we are going to commence a new chapter today, Capital and Revenue Expenditures and Receipts. By this title, we can very well know that all the expenditures are classified into two. Some are called capital expenditures, some other are called revenue expenditures and receipts as well, right? We are going to discuss this today, students. Okay. Students, all the items in accountancy are classified into two: revenue items, capital items. Let us discuss this each one in detail. First of all, let us know about revenue items. My question is, what are called revenue items? The items that are confined only to the year of their occurrence are called revenue items. I repeat, the items that are confined only to the year of their occurrence are called revenue items. For example, sales. Students, sales made during the first year is 60 lakhs. We pay sales tax during the first year on the sale of 60 lakhs. And when we get into the second year, we pay sales tax only on second year sales. When we are asked about sales, it is 60 lakhs for the first year and 70 lakhs for the second year, but we should not answer in a cumulative way. By this, we can understand that first year sales is confined to first year itself, second year sales is confined to second year itself. By this, sales is a revenue item. Is it okay, students? Sales is a revenue item. When sales is a revenue item, purchases is also a revenue item, and both the returns are revenue items, students. Are you getting me or not? Sales is a revenue item. We have known this here. Whereas when sales is a revenue item, purchases is also a revenue item. Both the returns are revenue items. And what are the other revenue items? What are the other revenue items, students? Coming to expenses. All expenses are revenue items. If we pay wages during first year, if we pay wages during first year, let it be an amount of 2 lakhs. This is called first year wages, students. And if we pay wages for the second year, it is called second year wages. When we are asked to speak of wages, when we are asked about first year wages, the answer is 2 lakhs. When we are asked about second year wages, the answer is 3 lakhs. But during the second year, our answer should not be in a cumulative way, that we should not answer that the wages amount is 5 lakhs. This is wrong, students. By this, we know first year wages are confined to first year itself, second year wages are confined to second year itself. This way, wages is a revenue item. Like wages, all other expenses are revenue items, students. And then we go to losses. All losses are revenue items, students. Let us suppose all losses are revenue items. This can be explained. Let us suppose there occurs a fire accident during the first year. Let us suppose there occurs a fire accident during the first year. Fire accident in our godown. There occurs a fire accident during the first year, and stock worth rupees 1 lakh lost by fire. Stock worth rupees 1 lakh lost by fire. Let us suppose that it is not insured. It is not insured. Then we suffer a loss of 1 lakh during the first year, which we call goods lost by fire, or it can be simply called fire loss. This is fire loss, students. And when we prepare final accounts for first year, this fire loss is debited to profit and loss account. And the result is it reduces the net profit of the organization during first year. And my question is, students, can we show the same fire loss? Can we debit the same fire loss to profit and loss account of the second year? Can we show the same fire loss in the profit and loss account of the second year? No, we can't show. The fire loss which occurred during the first year is confined to the first year itself. It should not be carried to the next year. So it is a revenue item. Like fire loss, all losses are revenue. All losses are called revenue items, students. I repeat, what do you mean by revenue items? The items that are confined only to the year of their occurrence are called revenue items. We took the example of sales at first. First year sales should be confined to first year itself. Second year sales should be confined to second year itself, and we should not answer in a cumulative way. When we are asked about sales of the organization, we should state the amount of sales individually. First year sales is 60 lakhs, second year sales is 70 lakhs, but not in a cumulative way, students. This way, sales is a revenue item. What I mean to say, this amount of 60 lakhs is not carried forward to the next year. This amount of 70 lakhs is not carried forward to the third year. Students, are you getting me? Thus, this is a revenue item. When sales is a revenue item, purchases obviously is a revenue item. Both the returns are revenue items and all expenses are revenue. As we have explained this in case of wages, all losses are revenue because the fire loss of the first year cannot be carried forward to the next year. This is called first year's loss and should not be carried forward to the next year. This way, it is also a revenue item. Right, students? All expenses are revenue, all losses are revenue, and coming to incomes. Coming to income, students, all incomes are revenue. What I want to say is, all incomes are revenue. All incomes are revenue. For example, the organization received a rent of 6 lakhs during the first year. Let us assume it so. The organization has received a rent of 6 lakhs during the first year. It is called the income of the first year. Should not be carried forward to the second year. This is shown as an income on the credit side of the profit and loss account of the first year. Should not be carried forward to the next year. So rent received, this is called first year's income. It is confined to first year itself. So it is called a revenue item. Let us continue here. And in the second year, rent received, let it be another 6 lakhs. Let it be another 6 lakhs. This is called second year's income. This is called second year's income and should be shown on the credit side of second year's profit and loss account, and this should not be carried forward to the third year. So first year rent received is called first year's income. Second year's rent received is called second year's income. First year amount is confined to first year itself. Second year amount is confined to second year itself. But we should not answer in a cumulative way. When we are asked about the income of rent, our answer should be 6 lakhs for the first year, another 6 lakhs for the second year, but we should not answer in a cumulative way. That is, rent income is 12 lakhs, which is wrong, students, right? This way, all incomes are revenue, students. All incomes are revenue. All incomes are revenue. Then getting into profits or gains. Profits or gains. Students, all profits or gains come under revenue items, and this can be explained. Let us suppose this is the very year of commencement. This is the first year of commencement for our business, and at the end of the year we have calculated the net profit to be 9 lakhs. We have calculated the net profit to be 9 lakhs. Net profit to be 9 lakhs, and income tax is paid on this net profit of 9 lakhs. Income tax is assessed and paid on this net profit of 9 lakhs. This is the net profit of first year, students. We have got into second year, and we have worked hard all through the second year, and second year's profit, this is first year's profit, second year's profit, net profit, second year's net profit is calculated to be 12 lakhs, students, 12 lakhs. My question is, do we pay income tax on the total profit of 21 lakhs during the second year, or is it paid on the second year's profit of 12 lakhs, students? The answer is simple. We pay income tax in the second year on the second year's profit of 12 lakhs. By this, we can understand that first year's net profit is confined to first year itself. Second year's net profit is confined to second year itself. This net profit of the first year should not be carried forward to the next year, should not be added to the next year's profit, and profit should not be cumulative, students. When we are asked to say about profit, our answer must be simple. The first year's net profit is 9 lakhs, the second year's net profit is 12 lakhs, but we should not answer in a cumulative way, that is 21 lakhs. It's wrong, students. Okay, now once again, what are called revenue items, students? The items that are confined only to the year of their occurrence are called revenue items. Here, first year sales is confined to first year itself. Second year sales is confined to second year itself. What I mean to say, first year sales should not be carried forward to the second year. This way, sales is a revenue item. As I have told you, when sales is a revenue item, purchases is also a revenue item. Both the returns are revenue items. As we have discussed, all expenses are revenue, all losses are revenue, all incomes are revenue, and profits or gains are called revenue items. Now, we are in a position to identify the revenue items. Now, let us classify them. Revenue items. Now, let us classify them. Revenue items. Among the revenue items, there are some items of payment nature, there are some items of receipt nature. Among the revenue items, there are some items of payments nature and some items of receipt nature. What I mean to say, first we have to identify an item to be a revenue item. After that, if a revenue item is of payment nature, it is called revenue expenditure. If a revenue item is of payment nature, it is called revenue expenditure. If a revenue item is of receipt nature, it is called revenue receipt. It is called revenue receipt. Revenue receipt. If a revenue item is of payment nature, it is called revenue expenditure. If a revenue item is of receipt nature, is of receiving nature, it is called a revenue receipt. For example, sales. When we make sales, generally we receive cash. Sales is a revenue item and it is of a receipt nature, so we call it a revenue receipt. And coming to purchases. Purchase of goods. Purchases, as we have discussed it, is a revenue item. When we make purchases, we have to pay. So, purchases is of payment nature, so we call it revenue expenditure. All expenses. All expenses are revenue items. Students, we know in case of an expense we pay, so it is of payment nature. Expenses are of payment nature, so they are called revenue expenditure. When we consider incomes, incomes are revenue, that we know, students. In case of an income we receive, so they are of receiving nature, so these are called revenue receipts. Revenue receipts. Now, losses. Losses is a revenue item. In case of losses, we lose, so these are called revenue expenditure. And in case of profits or gains. Profits or gains, right. In case of profits or gains, we receive. Students, we already know profits or gains, whether it is a profit or a gain, whatever you call, both are one and the same. It is called a revenue item, As it is of receiving nature, we call it a revenue receipt. So this is a classification we should follow, students. Now, if if an item is given like this, salaries. Salaries is an expense, a revenue item. Salaries is an expense, a revenue item. In case of an expense, we pay. So it is called revenue expenditure. Revenue expenditure. Right. When we are given an item like commission received, it's an income, a revenue item. Commission received in the sense it's an income, a revenue item. In case of an income, we receive, so it is called a revenue receipt. A revenue receipt. Right, students? This way, we identify revenue items and we classify whether it is a revenue expenditure or a revenue receipt. Is this okay, students? Shall we get into capital items? Okay. Now the topic is capital items. Now the topic is capital items. Now the topic is capital items, students, right? What are capital items? What are capital items? Students, in case of revenue items, we have defined like this. The items that are confined only to the year of their occurrence are called revenue items. When it comes to capital items, they should be defined like this. The items that pertain not only to the year of their occurrence, but also to the succeeding years. I repeat. What are called capital items? The items that pertain not only to the year of their occurrence but also to the succeeding years are called capital items. Example. Let us suppose we purchased a building during first year. We purchased a building during first year with an amount of 40 lakhs, let us suppose. With an amount of 40 lakhs, right. We have purchased a building with an amount of 40 lakhs. Building is an asset to the organization. Of course, a fixed asset to the organization. We can very well show it on the asset side of first year's balance sheet. My question is, do we call this building an asset only for the first year? No. It will be an asset even for the second year, even for the third year, to all the succeeding years, till it is sold out or till it collapses. Is it okay, students? What I mean to say, building purchased during first year is an asset to the organization not only for the first year but also to the next years. What I mean to say, the value of building should be carried forward to the next year and is called the second year asset also. Like this, it is carried forward year after year. This is called a capital item. Building is not confined to the year of purchase itself and is carried forward to the next years. This type of item is called a capital item. A capital item. Right. When students, one more example. We have purchased a car. We have purchased a car in our organization. We have purchased a car in our organization during first year. With an amount of 20 lakhs. 20 lakhs. And car is an asset, of course a fixed asset to the organization, and is shown on the asset side of the first year's balance sheet. Should it be confined to first year itself, students? No. It should be carried forward to the next years. This is called an asset not only for the first year, not only for the year of purchase, but also to the next years or succeeding years. So this is carried forward. It should not be confined to the first year itself. It should be carried forward. So we call it a capital item. Like this, like this. All fixed assets are capital items. All fixed assets are capital items. Okay, then if we take a bank loan, if we take a bank loan, 10 lakhs, let it be a long-term loan. Bank loan taken during first year. Bank loan taken during first year. So it's a liability shown on the liability side of the balance sheet. My question is it called a loan only in the first year? No. It should be carried forward to next year and is called a liability. It is called a liability until it is paid off. Till then, it should be carried forward. It should be carried forward to next years. So this is also called a capital item. A capital item. So like this, we can identify the capital items. Fixed assets are capital items. Long-term loans are capital items, students. Now, let us try to classify the capital items. Let us try to classify capital items. If a capital item is of payment nature, it is called, if we incur something on a capital item, it is called capital expenditure. If we incur something on a capital item, it is called capital expenditure. If we receive something on a capital item, it is called a capital receipt. It is called a capital receipt. Okay, right. I will get it explained. Here it is given like this: car purchased. Here car sold. Okay, car is a capital item. Car is a fixed asset It is a capital item. When we make purchase of a car, we pay. We incur something on it. So car purchased, this is called capital expenditure. When we make purchase a car, we have to pay something on it. We have to incur something on it. The amount incurred on the purchase of a car is called capital expenditure. When we make sale of a car, we receive something on it. Car is a capital item. Car is a fixed asset. It is a capital item. When we make sale of a car, we receive something against the sale. As we receive, it is called, the receipt is in the nature of capital receipt. The amount received against the sale of car. The amount received for the sale of car is called capital receipt. The amount incurred on the purchase of car is called capital expenditure. Is it okay, students? Bank loan taken. Bank loan taken. Loan taken in the sense we receive the amount of cash. Bank loan is a capital item. Here we are receiving some amount of cash towards bank loan. So the amount received towards bank loan is called a capital receipt. That is, the receipt of amount is in capital nature. The receipt of amount in capital nature, like this. When a company issues debentures and takes a loan from the public, it is also of capital nature. When a company issues debentures and takes a loan from the public, we receive a certain amount of money from the public. The amount received from the public by the issue of debentures is in capital nature. So we call it a capital receipt. We call it a capital receipt. Like this, capital items are classified into two: capital expenditures and capital receipts. Is this okay, students? Are you getting me or not? Now, let us take some more examples. Regarding this, regarding capital expenditures. Students, let us suppose we have purchased a machine. Let us suppose we have purchased a machine with an amount of 5 lakhs. To bring the machine to our place, we have incurred transport charges. To bring the machine to our place, we have incurred transport charges. Let us assume the charges to be 1 lakh. After bringing the machine to our place, we should get it installed. And for installation, wages should be paid to the workers, charges to be paid to the technicians. All those are called installation charges or erection charges. Installation charges or erection charges. Let it be a 50,000. Students, let us classify all these three. Machine purchased. Machine is a fixed asset. It's a capital item. Of course, it's a capital item. Here, we have made the purchase of a machine. As we have made the purchase of a machine, we have to incur an amount of 5 lakhs. we have to pay an amount of 5 lakhs. That is why the amount paid rupees 5 lakhs is a capital expenditure. And transport charges. Transport charges paid on the machine to bring the machine to our place should be added to the cost of the machine here. So, transport charges paid 1 lakh, as they are to be added to the cost of the machine, they also are classified as a capital expenditure. Installation charges, as we know, this amount is also added to the cost of the machine. So, this is also classified as capital expenditure. The total amount of capital expenditure incurred in this case is 6,50,000, which we call cost of the machine. Cost of the machine. Cost of the machine, right. And next, what I mean to say, expenses incurred, essential expenses incurred on the purchase of a fixed asset are added to the cost of the fixed asset. That is why those expenses should be classified as should be classified as capital expenditure. Capital expenditure. And students, one more example here. Let us suppose that there is a machine in our organization. There is a machine in our organization which has been under usage for a long time, say for a period of 5 years, and it is obvious that it goes under repair. It goes under repair. Repair charges paid in this case, repair charges paid in this case should not be added to the cost of the machine. So, these are called revenue expenditure. Revenue expenditure. But if it is said that repair charges paid to improve the efficiency of the machine, but when it is said that repair charges are paid to improve the efficiency of the machine, then such repair charges are classified as capital expenditure. Classified as capital expenditure. You should be able to differentiate between these two, students. Like this, we can understand what capital items are and what revenue items are, students. Is this okay, students? Have a good day.